To the Breakfast Club. My name is Darren Hancock, and this is the ThetaWaveTrader. Like we said before, ThetaWaveTrader is not a person, it is a mindset. So it's a matter of trying to stay calm in your trades, read price action, and when price action is not moving in your favor, how to recognize that early and how to get out, get back in, get resynced with the market. So let's look at NQ here. I'm looking for, we've already hit the weekly new week opening gap up here nicely. We've tagged it several times. Now I'm looking for it to run back down into the sell side, this guy down here, and this weekly new week opening gap below us here. That's my objective for the day. Let's look at Bitcoin. Got through those boxes. This is that example I was giving you yesterday. Once we work through the downside of the box, all the way up to fill the fair value gap, came back down, used the box again to extend the range. So far we still have downside. Now that we're on the bottom half of this one. Oh, we're not quite there yet. Oops. So when we see this box get worked on the downside, like we saw over here, we'll see continual downside. Otherwise, we have to see the break to the upside, taking this candle out. E-mini S&P. We've got a reversal through here. Let's look at the daily here. Got relative equal lows below you. And there's a little fair value gap down in here on the daily. So I'd like to see these equal lows get touched and see if whether or not we get back into this fair value gap below us here. If we leave a portion of that open and start going back up again, or whether we take that candle out and use that candle to continue pushing lower into this range. UNG. Yeah, I don't want to see it react off that and come back down. That was our fear yesterday. We want to see it break through this gap here and continue going lower. Copper.
Sorry, I just want to print the new agenda.
All right, so we'll be we dropped below this objective we were looking for yesterday. And anyway, that's all right. That's okay, love. So we did drop below that low here and then return back into it here. Just ignore that little cutie in the background there. He's doing valuation on a school in Toronto. So crude oil. I'd like to see crude oil get some support off this order block now and start running back into this fair value gap and back into this breaker. start this breaker here. Takes up these lows. I'd like to see it start digging up into 73.49 with the upside objective. S&P's good. Natural gas. We're back inside that box again. The wicks have done the damage. This looks like it's left a relative equal lows below us. So I guess the fear again is it rolling over and coming back down into these equal lows here below you. And we still have a lot of liquidity pools down below us. Gold looks like it's finally making a turn here. I'll have a look at that in a second. AGNC's flat. I'd like to see them find some support at this consolidation now and start marching higher. Goliath making its little move up to these relative equal highs above us. Soybeans marching up, so self back up to here. Yeah, we'll see if we can get, we're still waiting to get through this line here and on top of this fair value gap. So right now we're bouncing around inside here, working off the consequent encroachment again. We've come back and balanced this candle. Oh, I think we may even be just a little bit short of that. So if that leaves that open and starts marching higher, that's a positive sign. We don't get a full fill of that. Wheat still heading for our downside objective. Sugar took out these lows. We have a snap up the last couple of hours through this fair value gap, and I'd like to see us get through here, and we have. So if we come back and use this, I'm looking higher, looking for this objective above us now in sugar. And the magic box can go all the way down to here. So that's the upside objective. Start reaching into that box now. Coffee is still looking for our price leg to continue. Cattle still bouncing around inside a consolidation. I still want to see a big displacement candle here, get above these highs and use this fair value gap to go higher. Cocoa still heading for our downside objective. We're looking for in these equal lows. Lumber, slumber, and the little piggies are just moving back inside this common gap here, and this is looking for this that inversion fair value gap on the daily. We have a fair value gaps here to fill yet, and then we'll start digging into that inversion on the other side. And then we have gold. If we can sink a candle down here in the next hour, and then use this candle as support to go lower, that can come all the way back up inside here. It could literally come back up and fill that fair value gap. So what you want to see is a displacement candle and come back and leave a portion of this fair value gap open to go lower. Even the upper third or upper quarter of that fair value gap, we leave that open and go lower. See how the next few hours works out for that. Oil's going higher. On the 1 minute chart, I'm looking for oil to continue to climb higher. If we come down to this imbalance, I like to see this imbalance stay open. Start just using the top of that candle. If it's strong enough, just to leave and then really start pushing back up into this fill and this little imbalance above us here. See if we can't get on top of this fair value gap here. If we can get on top of that, then we're starting to look up deeper into this range. On the hourly. So I'd like to see us get through this candle on the 5 minute. Start using that for some support. And I'd like to see, yeah, that's how I like to see oil working. And we finally have our breakthrough in SWISSY. So those of you who have traded Forex, we've called it for your rate from here all the way up to here, and we're looking for that upside objective, and we're just shy of it now by, I've got to make sure I even got the right. So some people take it from here. So I'll show you the different levels that some people measure at, and then I'll show you the one I like to measure. We'll take the, from these two candles, high to low, 50% puts you right there. That's the most common way people look at it, from high to low. And if you take the bodies, 50% puts us right there. And if you take just this body, 50% puts you right there. See, strangely enough, how it kind of all overlaps roughly in the same area. But if you take the high to low from the entire wick to wick, you'll see it hits it right there. And that's where we're at right now. So that's where I like to see this now come back into here. Now that we've hit that mean threshold, I'd like to see this come back into this level right here, find some support just off the top of the fair value gap and leave this portion open. Just come back in no more than the top 25% of that gap, of that inversion. That becomes an inversion now. So I'd like to see this inversion continue pushing higher. Here's some of the guys that gave me different stuff as the real estate sector yesterday. Watching that retrace back into here. You don't want to see this candle get taken on the downside. So you'd want to see this little portion stay open and start pushing higher, take out this high, then you'll get some leverage to go higher. Then you can do, if we can start breaking through this little box here. I don't know who it was who gave me this yesterday, but if you can get through that level there to the upside, you can do a swing projection on where you think that might head to for the next few months. Don't forget you have the election. This could drop all the way back into here. It could get really messy on you. So keep your leverage low. Disney's still sitting where we want it. Still want that to go higher. All the time it's finding support inside here. I like that idea. we get a wick above this, now this level here and these two candles become important to me. As stated, oil's moving higher. You want to see that start to break through here. If it comes back, it did. So if it comes back, find support at that. I'm good with that. Ideally, you want to see market structure break above this candle. If we can get above that, use that for support. We can push higher, take out these equal highs above us, and start running back to London session here from yesterday, or London session today and Asia session. I like how we use this level here on the 1 minute chart. We got through it, came back, found support at it, look for it to go higher. I just want to see it keep marching in that direction. Let's say good morning to who's ever in the channel this morning. Oh, we got 21 people this morning. We lost 3 yesterday. We're only 4 people away from breaking our 1,000 mark. And then I looked this morning, I thought, oh, now we've lost some people. We're down to 993 or something like that. So 7 people, 7 subscribers today. Let me know if you're 999. And yeah, I think today's the day we're going to break 1,000 people. I feel it. I feel it in the bones. Let's make this $1,000 day for 1,000 people. Let's see if we can't nail ourselves a killer day in the markets. Good morning, Craig. Good morning, good morning, Hadi. What does Goliath Resources do? I don't know. I have no idea. I just saw it back in the day when I didn't know what the hell I was doing, and I bought it, and I managed to sell some at a profit. I tried to unload it all at a profit, but like I couldn't get enough orders out to get rid of it. So I've been holding this thing for ages trying to get rid of it. So I don't even know what it did. I was just one of those penny stock traders back in the day that didn't have a clue what I was doing. I've been holding it for a long, long time. So I'm just looking for it to get back. It's only got to go a few more cents and I'm out. I'm unloading that position. So I'm not looking at Goliath Resources at all as any type of, there's nothing I give you as any financial advice by any stretch. Morning, Abs, Mohammed, and Fiddlesticks. Good morning. Joe Mack, Zach. Fun trading oil this morning. Yeah, oil's, I'm in this oil run right now. I caught off of this one here. I got a little late to the party. But yeah. I want to see, you want to see it stay above this because we can get a big run back down and below that. And if we get below this level here, then we're running lower. You put your fail safes in there. So for me, a fail safe would be if we drop below this level here. I'm actually, yeah, just at that level there for this guy. So if we drop below here and take out that candle for this reversal, then we're looking to get back into that range, back down into here. So if it does come back and take me out, then that's my fail safe, because that's the change in direction. That's the market changing. So that's how you kind of set yourself up for, if things change on you, here's why. this is what I need to see happen. If you're wanting to short, you go, oh, I want to see it take that candle, and then I'm going to get in on that candle and then run her down, right? Well, that's the reversal. So if you're trading it on the way up, you trade it through those reversals. So I'm keeping a hold of this. And I'm looking for that to get all the way back up into here and take out that high. So, yeah, there's that. And let's get back to our chart. We'll see what people are chatting about. Edgar, buenos días, señor. Goliath is a junior gold exploration company in Canada. Well, there you go. I probably knew that at one time, that it was gold. Thinking, oh, gold's gonna. Somebody said something about gold going to $3,000 or something. Back in the day, I was like, yeah, that sounds good. I'll buy some of that. Mate, what do you think about the Dow? Our weekly fair value gap's good for a buy run this morning. The Dow? The Dow. Let me have a look at the Dow. I don't see any buying Dow just yet. Yeah, we've run the lows out, but there's no indication that we're going lower yet or higher yet. I'd have to see it take out with a bold candle for 42,926 or at least 419 or 42,918 to the downside, or sorry, to the upside with a bold candle. And then you'd have to break market structure to the upside at 926 and use that 904 candle as support to go higher. And then you're just coming back into the range up to 935, 937 range. So, yeah, that could be the reversal. But what are we on the daily here? Downside is 42,853. You could come all the way back up to, I don't know what kind of trader you are, Mohammed, whether or not you're a long-term trader, short-term. But if you are looking for a return, I'd say 43,001. Today's open. If you come back to today's open, I'd like to see that just continue going down. That would have to run quite significantly for me to start looking at that as a run up. I still see it as a further downside. We could see it come down to just shy of 42,851 and then return back up into 965 to big figure, 43 big figure before going lower. Yeah, that's what I see today. How many seconds delay do we have? Oh, there's only a few seconds there. Oh, it's only 2 or 3 seconds delay. That's good. So from this morning, if you managed to catch this morning, when you got into this level here, the moment we drop below that low and come back into that range, that's our short. This is our, on a higher time frame, you'll see this as institutional order flow entry trail. As soon as we take that out, come back into here, we're still less than 50% of that range from here to here. The body stay below that. That's a positive sign for continuation on the downside. And the moment we take out this candle here, it's good. These two candles on the downside, come back into them, continue on the downside. We're aiming for this downside objective here. Looking for yesterday's open. Initial range gap. So running this into profit. Move all my stops into profit here. Looking at this box down here is our first objective, so you can take a portion off there. Well, I have to manage this from the back end because I only got one lot on there, so looking for eventually, I want to see if we get through this, start using this for support to go lower and take out, extend the range and take out the lows. You're looking at the wicks here. We have relative equal lows here, or what retail might call tweezers. What we got here? Last June, Nate, do you think? Hello, ThetaWave, first time here. Good morning to all. Antonio! Good morning, Antonio. Good to see you, my friend. Good to see you. Welcome, welcome. Aaron, good morning. Russell, iconic. Take a look at CL again. Oil, yeah. It came down. I have my stop loss sitting here. I should have put my stop loss sitting here. It came down, took me out. that's okay. I got a couple of bucks profit there. I want to see it take out this high here now before going higher. We're in that consolidation. The possibility of it rolling over here. We are using this level for support, which is nice. I want to see that continue to hold support to go higher. Otherwise, this could roll back down into this candle, these candles here, inside that range before going higher. Just because oil's so sloppy right now, you got to be really, I don't mean that literally, but you got to be careful about the ranges that you're in. And if it took, I was already in just at or near the premium, the range. So I didn't want to, once it reached that height, I'm like, okay, well, that's about 50% of that range. So if it comes back to 50%, it could just come back, tap me and leave. So I want something cleaner for me because I got in a little late. I wanted to see this would have been a much better trade right here off this candle. Come back into that one. And if you're new, Antonio, you're going to see us call a level of precision that you're going to should be impressed with. So anyway, we're still looking to go. We've dug into that range there. So you're going to be really managing the problem is now we have to take that high out to go higher. And that would be like wiping out all my profits. We've hit that objective here. We could come back up into this candle. We'll come quite up. We can come quite high on that. I do like just coming back into this candle's mean threshold. Subsequent encroachment. Snap off of that. That's a good sign. I wouldn't want to see it come back through there. I'm going to put my stop. I don't want to see it come through that again. That'd be like an institutional order flow. Not really. Depends on what time frame you're on, I suppose. And I want to see that push down even deeper still now. So I'm just trying to manage the back end of this as what's a safe place to put it. That may be too close, but I like that wick, 50% of the wick, and that nice little reaction we've got off of that. Now I want to see this mean threshold give way and start digging into 50% of this wick, start re-engaging yesterday's initial fair value gap open. And we'll see, because you could see it at 9:30 here, that snap right back through us and run back into the range again. Good morning, Russell. Derek, good morning from trading desk in Chambersburg, Pennsylvania. Shot a not so good round yesterday. Glad to be back at trading. Well, I'm glad you got your back, my friend. Glad you got your back. Russell, Derek, but did you have fun golfing? I like Tony Robbins' thing. Look, when I'm playing golf, I can leave anytime I want. I paid for the whole round. I could hit whatever I like. I could stop. I could walk. I could skip holes. I paid for it. I could do whatever the hell I like. No reason to stress myself out over that game. Because he used to get himself so angry playing that game. What was it? Who Churchill said? Golf was a perfect way to ruin a good walk. Good morning, Peppy. Good morning, all hounds. Good morning. Oh, good. Another crude oil in the chat. Thank you. Looking to open at discount, it appears. Oh, see how that opened? Ran right back. That's why I want to make sure that I was well covered. I looked over there and didn't even look to see that open. That's why you cover yourself on the way down. If you only got one lot in there, you can't kind of take off a portion. Oh, okay, that's good. Now we've traded above here. Ran out that high. Well, a regular trading hours gap, we haven't even, yeah, we're just ripping right back down again, hey? Wow. Hit that objective. We're right inside the 1 hour box I like to give you here. And we're getting a snap off of that. So we'll wait for this whole 930 range to set itself up. On a 1 minute chart, I'm looking for a 1 minute or a 15-second chart for a run back into this new day opening gap. Or sorry, the regular trading hours gap. 50% of that is sitting up in here. So that's the run we could be looking for. At 476. Some holes, yes, some holes, no shot. 90, which is not a good round for me to 90. Oh man, I don't think I've ever broken 100. I don't think I've ever broken 110. Well, there's a nice little run this morning. All right, so now we're looking for 9:30 to finish up. 9:30 to 10. Good morning, family. Paulette, good morning, good morning. From Bahamas. Bahama Mama. Welcome, Paulette. Russell. Same day, I'll own a vacation. Someday I'll own a vacation in the Bahamas. Vacation home. Yep. See it, picture it, make it happen, man. Make it a reality. I love that idea. Good for you, Russell. This gas price out of my pay grade. It's out of my pay. This fast price action. Yeah, curryfish. Hello, curryfish ball. Did you get a good sleep last night? I hope so. Paulette, your vacation house awaits you. Paulette's a real estate agent. No, I have no idea if Paulette's a real estate agent or not. All right. Well, what are we looking for today, folks? What are we looking for today? What kind of price action? Everybody's looking for smooth price action today. Looked like a nice little opportunity from going from weekly to weekly. Now, whether or not we reach for these lows, we'll see how we act at us on the other side of this weekly new week opening gap. Because we're, you know, our little boxes, if we're going to drop the magic boxes as it were, I'll be looking up here at 509 to 513, and then this one that we're in right now. So we've hit that range. Now that's the hourly. If we do get a freeze up inside this weekly, I'd like to see it come back into this candle or that yellow line you see right there. I'd like to see it come back to that and then continue going lower. There's nothing clean in here just yet, so we'll just wait. Wait for the customary 10 o'clock. She works at a private bank. Good for you, Paulette. Well, let's see if we can't get you to get your own bank. That's the whole thing. We're here to get you some bankable demo dollars. We're a price action study. Those of you who are new to the channel, we study price action on a 15-second and 1-minute chart. We're firm believers in that there's an algorithm that runs the market. And if you find that very difficult to believe, that's fine. You're entitled to that. Just stick around and watch, and you'll see how accurate this is. And you'll know that this is not buying and selling volume pressure. This is not buying and selling pressure at all. It's algorithmically driven. It stimulates people to buy and sell. Has no bearing on volume. Has no bearing on who's in or out of the market. This is just the algorithm delivering price at specific times. And you'll see it on a 15-second chart. And what we show you on a 15-second and 1-minute chart, you can find on any chart. The setups are exactly the same, because if it's algorithmic, it's fractal through all time frames, and you should be able to see it on all time frames. So that's a pretty bold statement, but stick around and you'll find out whether or not we're full of crap, right? You'll know. I work remotely. How do you count cash remotely? Do you like put your computer screen on and say, okay, bring in the next wad of cash? Do this with your finger. 1, 2. Do you think trading props are worth it? It seems like they designed so you have to keep re-signing up. Really don't know if it's worth the mental stress. Does anyone think that's a good idea? Well, Joe Mack, you could look at a prop firm 2 different ways, I suppose, or several different ways. One is you're only ever risking $29, $55, $100, whatever it is they charge you, whatever prop firm you're in, they're only charging you that much. That's all you're going to lose in a month. Really, that's all you're going to lose. You have a potential of making more money, theoretically, provided the prop firm is legitimate and they pay out and all that kind of stuff. You're only really risking $100 of your own money. Whereas if you have your own cash and you've got $1,000, $4,000 in cash in an account and you blow $100 in a day, you sit there and you talk about stressing out over something, especially if you're new to trading. That's a lot of money. That's like 1% of your account or 10% of your account gone right there in one day. So that's even more stressful when you say, I've only got $900 now and I got to make this work. I got to take back the $100 I lost yesterday, blah, blah, blah. All the psychology starts to kick in. Whereas if you say, well, look, they give you $100,000 account or 50,000 or whatever it is you choose to do, and you practice on a higher time frame or a higher volume, you got more wiggle room. You've got $1,000 a day or 2,000, whatever they give you a day of wiggle room. So if you stick with your trades the way you're supposed to, if you lose $100 of that, that's nothing. That's 0.1%. So you're not worried about that at all. You go, okay, now I can get back in the game and you can focus. So really all you're losing is $100, right? Until you get your trade plan down and the prop firm starts paying you out some money. And then you put that aside in a little private account and you sign up with a service. This is just my view, by the way. You sign up with another broker, and now you have to worry about the broker that you choose because they're shady people. They're there for themselves. They're not there for you. So they're, depends on what market you're trading in and you have all the benefits or problems with certain brokers where they'll take a run on your account, whether or not they send the markets out to order or whether or not they hold them in-house and pit you against other people. There's lots of interesting things. So you want to get them to send it straight to market, your order. So picking the right broker firm is important. And then you have all those other stresses to deal with. And you don't want to have that while you're trying to look for your setup. So once your setup's good, you practice in these prop firms or just practice with a demo account. Because the next one down below a prop firm is a demo account. And a prop firm is a demo account, but you can turn it into a moneymaker if you do your trade right. So all that stuff, if your setup is correct, if your trade model is correct, it doesn't really matter. You're trading demo anyway. So if you demo it and you make some money at it, and you start to make some more money and the prop firm starts paying you some cash, use that on the sidelines and start doing your own private account, and you don't have to worry about prop firms. Because once you get to a certain level, I think once you pass the combine, you don't have to pay monthly fees anymore. You pay a fee, I think it's a Top Step pays you, or you have to pay them a fee to activate it once you've passed. And once you've passed, you don't pay any monthly fees. They make their money off your trades. They take 20% of your trades. And when you think about it, you're using their leverage to make more money. You can put aside as $1,000. So that's my view. It's a good stepping stone, but I don't think it's a long-term career choice. If you're doing well and you're making money, you don't need a prop firm. take the money, stick it aside, put it in a private brokerage fund, find a right broker. If you find a broker you really like, stick with them and trade it your way. That's my views. What are you guys' view on that? Bitcoin started opposite the NASDAQ. Paulette, I am one of the execution crypto traders for our clients and takes buys and sell orders from them. Ah, Paulette, you need to come into our little chat group on the weekends. I like to trade crypto on the weekends. It's killer fun. So we have not got through this level we're talking about. We've got a reversal here. We've traded through it. So here's the thing. If you trade through it, come back to it right here, and you're looking for this to go higher, and it trades through you again on the close, comes back, gives you an opportunity to get out of your trade at break even. Now you sit flat, because once it trades below it, it's taking a run on the liquidity below. So it traded below, took the run on the liquidity. Now another way to do this is to say, if it trades back through this one more time and recaptures that order block or that fair value gap, for bullishness, I want to go, once it trades above it right there, comes back into it right here, you go long, and you're looking for it to get above this candle here. So that's what you have to watch for inside this mess here. You get the fail safe, saves your stop loss. Stop losses run. Is it just a stop hunt? It is. So when it gets back above here again, right there on that candle, sorry, right here on this candle, if it returns back into that order block or that fair value gap one more time, or it does right here, that's where you go long, and your stop loss resumes back down here again, because you wouldn't want to see 50% of that wick even get taken. So then you see the upside. You want to see this order block, so you pay yourself at that order block, and then you want to see it get through that and use this one to get a mountain attack on the upper side, all this liquidity up here. So this was just a quick stop run before running back into that range. So your next upside objective would be in here, just above that candle, and then see if you can find support above that, get through this fair value gap here, and start pushing higher. Bitcoin just turtle soup, really good. Yeah, that's the one we're just looking at there. And that's how you would have looked at that. I would have looked at that on that's a 15-minute candle. So let's look at that. The same kind of setup down here on a 1 minute. And I'll show you where that turtle soup, you could have bought in on that turtle soup. So here's that low. We ran. Here's the turtle soup. There's the reversal. You take those two candles there. If we trade through them, if it returns back to them, you get long. So you can't see how if it comes back. So you look for the next one, trades through it. Do we get an opportunity to get back to it? We do, all the way back here, because it doesn't take this one out here just yet. So there's that candle, trades all the way back into it right there. There's your long. So you would have got that at 856, not quite down here, unless you're just a all in kind of, as soon as it sweeps that, I'm going turtle soup. That's ballsy, because you don't know it's going to turn around unless you got some secret that I don't know about. But then that's that order block. So you just say, let's say, I don't buy that, Darren, that's crap. I'll wait for these two candles here to get taken to the upside, and then I will take it from there on a close. So this one closes above these two candles. So your orders are all inside this candle, and your stop loss is just below. So look, comes all the way down inside those two candles. So we've traded above them. You can literally catch it right here. Your trades are on. You would have had some drawdown here unless you went to another one at consequent encroachment of that. Went through. Your confirmation is when these highs get taken, and they did. They traded above, give you an opportunity to get back into them, and then off to the races you go. So that's on a 1 minute chart. Same kind of principle. 15 minutes, you're bellwether. See that one? It took me out right there. I'd still be in that, still be in that run up. I pulled my stop a little too close. Should have left it below that low. That's okay. So it hasn't reversed yet. It's still continuing on the upside like we talked about. We're looking for that upside objective still. Look for the session open and look for just above that and look for that candle. So I like this upside objective inside here, session open, and the magic box will go right here. I will say, there's the magic box. You want to see it hit that, go through that and run. How's our gold doing? Yes. So gold, we want to see, now that we've ran below this low, back into this jobby here. There's the that would have been the downside magic box. We're getting a nice snap off of that. So we have a low, a run lower, and a run higher. So you're in the middle of that range right now. Hands off, man. You wait. Confirmation is trading through this box. You're going lower, come back up inside. You might get one lower, like 15-minute order. Down in here, you'll probably find that there's a reversal there. So we're going to look up here for the reversal. There's one right here, and that low taken out there. So I'm looking for 2 o'clock in the morning to 6 o'clock in the morning. So let's take a 15-minute candle, and I'll show you the setup that happened in gold this morning. So we have reversal here, take out the low. If we can come back into that, that would be great. You don't. So these are all up close candles. You want to see these two candles get taken on the downside. We have a break in market structure to the downside. So as gold starts to run back down, you don't catch this here, because if you did, you're just catching this internal range liquidity, and you'd be running right back into this little box right there. That's where I would have, if I could have caught that there at that time, I would have ran it for this little piece right in here. And then you wait to see if it breaks this on the downside on a close, and it closes right there, trades below it, comes back up, and does not give you an opportunity to get short. So it literally closes on that, opens on it, gives you one little wick back into 50% of the, or lower half of that candle, that wick right there. You're looking at 50% or less, and it comes back to right here, just under 50%. And then we continue on to downside. Look for this one here. You run through it, you come back inside it, and then you look to go lower, extend the range. Now this is our next objective is these lows right here. If we take out that candle on the upside, then we're looking for another run back up into these relative equal highs here. This is an immediate rebalance, so you treat this like a fair value gap. So you could have caught this gold run right here this morning for a rundown for these lows. If it takes those lows out, you're looking for continuation back into the magic box that you would have drawn here, and bang, just that quick rundown there. 1 minute. Let's look on a 1 minute and see where you would have found it on a 1 minute chart. It's a little clearer on a 1 minute, isn't it? Look at that. We have a new high. You look for our fair value gap or imbalance. There's my imbalance right here. Or this candle to be taken to the downside. It gets taken to the downside. So if we can trade back into that candle again before taking out this low, then we can get short, right? So we don't get an opportunity to get in on it. It keeps coming back down to the discount array right here. Comes back into that. And then we see a return back up pull your fib tool from low to high, comes back up into that box we're looking for, and look at this right there. That little imbalance comes right into it again. We have little highs that are taken, same kind of reversal. We get below this candle, trade back into it, or that imbalance, and down you go. So you could have caught that gold from here. You want to see a significant break in market structure, you're saying, you know what, Darren, I'm not convinced of all that crap. I want to see these candles get taken to the downside. You say, okay, when they get closed below on a downside run, which is right here, the moment you return back into them, you get short. So you're right back into them. There's a little wiggle room there. There's an imbalance. Trade back into it. And yes, we cut through candles. And if that doesn't make sense to you, stick around. It will in time. Study ICT stuff. You'll see that it works magically. It's magically delicious, my friends. So this is just a quick run back into here. This may continue going higher. Just to win a quick, anybody who's trailing their stop losses up, quickly come back, take these guys out on their relative equal lows, and see if it closes back through this level here. Long setup earlier. Still no first failure on the 1 minute. Not my 1 minute. Why is it giving me my fair value gap here? 939. Oh, that's an immediate rebalance. We'll see if that acts as the 939. Not sure about that one, but Tristan, good for you, man. If you program that in as our immediate rebalance, damn, man, that's smart. Watch, see if it finds support inside here. See, it's pretty solid levels. So $9.39. That's the one I got here. Michael says, just like there's someone in the machine, ICT works. It just takes a while to really understand it. Keep practicing this, doing and jumping a little. Oh, read US news. Let's see if we can't find some more fun here. So there's their order block. Return to this imbalance. Pay yourself inside this little run from here to here, back up into that range. Pay yourself, pay yourself, pay yourself. Too many people get greedy and start running for, oh, I'm going for these old highs here. If that doesn't, you don't break the upside on that candle, you ain't going to that. If we don't get support off that candle and this candle, you're not going that high. You're just going to this range. This range has got liquidity sitting in it. So ES is just a mess as well. So we're not touching any of this stuff. Yes, it's 10 a.m. now. You see, we're still looking for this to go higher. This is still coming lower for wheat. Sugar, we wanted to see sugar pushing up into this range. So that's going. And we want to see coffee get down there. That's what we want to see. Did you hear yeehaw? Someone slapped the cattle, slapped the butt. We want to see that run up there today, break that high and freeze up there. And then tomorrow, Thursday's reversal, come back into this level and then use Friday to go higher. That's what I'm looking for cattle anyway. And we're looking for cocoa to continue to take these lows and aim for the box below us here. That's in slumber. And we're looking for this to dig up into that level for the lean piggies. And so far, everything's moving the way we wanted it to. Everything is moving the way we want it to. Look, it's this. Ooh, lovely. Pay yourself there. Off that guy. Just because I put this box here doesn't mean to say you're going to hit it. Or move your stop loss accordingly. Not that you do whatever the hell you like, but that's optimal trade entry reversal. So if that just hits off this breaker right now, because it took this low out, that's all a breaker. All those candles there took that, broke that out. So if we come back to the breaker and it finds support and starts to come all the way back down into that fair value gap below here that we never got an opportunity to get in on the 1 hour chart, here might be the opportunity before running up there and taking that out. So watch carefully. Pay yourself here at that old high. Otherwise, you could just get hammered right through you and eat up all your profits. That's just my advice for trading internal liquidity for what it's worth. And it's not worth anything because it's all demo money. And if you're holding on to it, then manage your stop accordingly. If you did the 50% off a smaller time frame, if you did manage to get in here, 50% move to break even, 62 move to 50, 70 move to 62, and wait. You're on the hourly. So if you're sitting, your stop loss is sitting here, you're already in some big profit. You're above the 50% range. And if that continues to push up to 80 or 79, then come back to 75. And if it goes to 88, move up to 79 and then wait, because that 88 could fill the fair value gap and roll over again. And if it starts getting through 88, look for that as your upside objective. And you're just kind of managing it from the back end, or you're looking for a reversal on the lower time frames. So you're constantly looking up here. If you want to manage that as well, you can manage it on the 1 minute chart. So as soon as you get a reversal set up here, so if you take out this low here on the downside with a distinctive candle and come back into it, you can close that trade off because we're coming back lower. So you can manage it. If you're good at recognizing reversals, then you can manage it with that reversal. See, I wanted to see this get taken to the downside on a close, and then I'd say I was on the wrong side of that. So I had to put the stop right there instead of there. It literally came down. The body did not take out that candle on the downside. Literally the wick came back just enough to take me out perfectly. And then you don't have a reversal here, here, here. There's no reversal that's taken place yet. But if it takes out these guys here and breaks market structure to the downside, this could be a reversal. So the warning is there. You guys decide what you want to do with it. Disney, come on up, Disney. Real estate, yeah, we want to see it keep climbing, and that's the upside objective. We're going to get through here now. Use that order block to push higher. And if there's a specific asset you want me to look at, I'll be happy to look at that for you. We finally taken out these lows. This is that patience piece that I have to work on. I was short on this one from way up here. That was my objective. Then these were my objectives. And if I had the patience just trust that that's the downside objective today. That would have been the $1,000 day right there. But instead it was 400. And I left my stop loss way back up there still. This would be reaching for the objective I'd hoped for. So there's the mean, or the consequent encroachment. Consolidation from here to here. Wicks below, body goes below. You don't even get in the CAM model on that unless you use this as your consolidation and you ignore the wicks here. You look at this, body trades. No, you don't even get it there either. So you don't even get a CAM model entry on that. So looking for these lows to get taken and then look for a reversal here. If not, then we could be looking for a run below these lows. This looks like the next downside objective at 343. Take those lows down. Isn't that odd, hey? Right during the 950 macro, it starts to spool, runs up, cleans out liquidity here. Did it take out the liquidity there? Nope. Reverses. I've got no reversal in here. 15 seconds. Let's have a look at a 15-second chart and see if it's there. Oops. I'll put that back. Get back there. Wrong chart. 15 seconds. Ugh. So freaking obvious in a 15-second chart, hey? Woof. I should have left it on a 15-second. See these lows, these highs get taken out. Ding, ding, ding. Watch this. Reversal right here. Right on. Here's 50. Where's 50 start? 50 starts over here. We run down, clean out that liquidity below and above. All liquidity is gathered up. Reversal. Trade below it. Look for a return back into this order block. It does. If you say, no, I don't buy in that, Darren, I want to see these two. I want to see a market structure break to the downside. It breaks market structure to the downside, but you don't get an opportunity to get on. It's out of dodge. So you say, well, let's take look at the all these big down close candles that take out that run. This would be the breaker that all this shit's buried in here, right? So those are the final downside. Look at that. It's taken to the downside, comes back up, finds support, and then you continue on heading back down. Now we want to see this candle get taken for continuation to the upside. These three to go to the upside. Otherwise, we're just looking internal range. This is running back to internal range. Get back up into here. And then you're looking for this to reverse and come back down. If we're looking for these, oh, they're already been taken. Sorry, we're looking for those lows. They've been taken already. So now a reversal would be for me getting above these three candles, finding support at them and starting to come back into that range. So we'll see how we act off this candle and these three. Yep, this one has been validated. This one's been validated. We come back and tap. So here's the rub. We got one to go high and a key off of this breaker to go lower. We have further downside objectives over here that we're looking for. But if we just ran that out now, we run all the way back up into here. We're looking for it to take these candles out here first. If it doesn't, and we're still looking for further downside, and this is just ran back to gather up some orders to run lower, we need to see these three candles hold price. We need to see this fair value gap give up price and go lower. And then this fair value gap here. Inside this small little range, institutional order flow. Pop in, run back up into that range, pay yourself. If it rolls over now and keeps coming lower, you'll know why. If it runs through here on a close, we want to see a body get above here. That's a break in market structure. And the fact that we're not just coming up to this and zapping off of it real quick and rejecting makes me feel like we want to go higher. Inside this range, you're looking up here again for your, if we break through this upside objective, could be as far as these fair value gaps again. See how we're climbing up above them? So watch these three. See how we've got the steps? Support, support, come back, find support. There you go. Now you got a body above. Not yet. Not quite yet. Come all the way back into this order block here. You do not want to see the mean threshold give way, so I don't want to see these two candles, these propulsion candles, get taken. I like to see those find some support inside them, ideally at the open of that candle. It's just above it, right at the high. So you want to see that keep climbing higher now. Still haven't got a body above here yet. And you have to be disciplined enough to wait for a body to get up there, because if that just rolls over and comes back down, you go, oh, thought for sure it was going to go higher. If we take this candle out here on the downside, then we're coming back into this range, and the next downside objective is here. And the body did not break the high. So that's good. I like to see that come back into there. Mean threshold, hold price. I don't want to see this. This is just coming back in here for a reversal. We took that high out. Watch this candle right here. You're stuck between this going lower inside this range and those acceptable downside level, if that would have been broken, and it wasn't broken yet. So right now you want to see, you're kind of hinging on this one to come lower and this one to climb up on top of it to go higher. So watch that little level right there. Morning, Dave. Oil's long target was hit. Hitting that fair value gap. Nice. If that hit your target and you've took out these little highs here, if you're looking for London's high now, again, you want to see this. This took out this low, extended the range, took out this low. Then you see a reversal. Now that you've taken out this one, you see a reversal, takes out that high, trades all the way back into the reversal and keeps pushing higher. So if you would have closed out your trade right there when it came back and hit it, and then you say, oh, now it's running back through it, I load up again in the discount portion of this range to go higher. Stop loss was here. I'd move that right into break even now, just because you're through that. You want to see it break through this and use that for support to go higher now. And you're still looking for this upside objective here. That to fill, and then that upside goal to be hit today. And you're still going higher now that we've taken these lows out. You've got your reversal. You've traded back into your reversal in the discount to go higher. So I still see that going higher. There's no, this small reversal we saw here was just enough to take out that low. and then it created another reversal saying, guess where I'm going? It took the high out, came back in, and you say, all right, now we've got a new reversal this way. So if we take out that low, I'm on the wrong side of this, get back in sync. If not, I'm going higher, especially if you got an upside higher time frame objective to go higher too. You came back into the discount portion and off you go. And it did leave that last little piece of price open. So there's a nice little hint. As soon as you see that candle open, you see it. I like seeing that fair value gap stay open. That's a positive sign for an upside run still. So we got to get through here. We've broken structure here. We finally traded above it. Come back inside this. This is all a nice little breaker. You want to see highlight that come out, and you want to see that start pushing higher anywhere inside this thing here. These three candles. But the losses dropped me to minus 8,000. I just came back this morning with Bitcoin. I'm only minus 100 down on the account. Decided to use this opportunity to desensitize from using large positions. Only had 2 losses. Good for you, Hiram. If you're, like I say, if you're following your rules and you're following your setups, and you're studying price action like this, and you're saying to yourself, here's where it fails for me. Once you see that, your stress level drops quite significantly, because now you go, I'm on the wrong side of it. You just paid, like Michael says, you just paid a premium for new information. So if I get through this candle here, on these candles on the downside, and break market structure here, then I'm looking for this to continue back down this fair value gap and lower. So there's a little imbalance right here. I don't want to see this downside get taken. Otherwise, we're in this potential for a run down into this range again here now. You want to see this get above that imbalance. We're working the bottom of it, so it doesn't look so good. You want to see it get above that, but we're still inside the area we want to see go higher, and this to go lower. So if we're going lower, you want to see a quick stop run, still staying inside here. If your stop loss is sitting right here, then this is a quick down, but you want to see this level here climb above, find some support in there and get through this. Ultimately, they want to see structure break again to the upside using these candles for continuation. If we don't, we just use the mean threshold, look for it to hit it, and use that imbalance for some support to go higher. So all its stun has just come back up. The bodies are respecting the imbalance. And now we're wicking, still inside this. Now start going higher, or if it rolls over here now, takes these lows on a close. So you're looking for lower. Your stop's probably going to get hit if that holds down. Yeah. We'd have to see these candles get taken to the upside now. Like this is going to be a quick stop run. So it just came back, found support of this. It's running you out. Yeah, you paid a premium to say, I'm inside this range again now. We did not get above there, so you're running back down into this range. That's when you can feel a little less stressed when you go, no. Once you study the price and you go, I don't want to see it get below there. If it does, then it's coming lower into this range, and sure enough, it has. Antonio, NQ, would you consider a low 300s? Yeah, ideally you want to see it take out these lows here and start getting back down into I'd say 338. Taking out all these lows. Watch these three here now. Look at your fib tool. If that was your, again, you guys got to be disciplined to do this. I want to show you. I'm not talking while it's happening. So see this reversal here? You come back into, you take out that low, body comes back into it right there, trades, and then go short. 50%, move your stop loss to break even. 62%, move it to 50, take half your trade off and a portion off here. If it hits 70%, optimum trade entry reversal. Now look for this return into here, or that little imbalance we talked about over here. Leave this open and go higher. We've returned it back into this level. Now you're looking for it to go higher. There's your optimum trade entry reversal. There's the reverse. You've taken out all these lows. So you want to see it reverse back into here. And if you can't get that, then you want to see this set of candles here get traded back into. They do. This is still open. I wouldn't want to see it get any lower than that. Okay. Watch this level here. We'll see if this gets taken on the downside again. This is already in that lower box, so I like to see this one here hold. Right there. Now you want to see it get above here again. See how we've got these highs taken, this reversal here. So you've got one for a long, one for a short, and you see why you're in this consolidation. And you can get beat up in here pretty good when you've got overlapping support. So now you've taken out a high. You want to see it come back to that and leave, not through it. So as soon as it gets through it, you're looking back inside this range again. What's down here? Well, there's your little magic box here. And then you got the upside premium. You pull your fib tool from high to low. You'll see how this sits up right here. 50%, there's the discount one. 50%, there's the premium one. Inside a small range, you're looking for premium to get up on top of the premium to go higher, extend the range for the next leg up, or eat through the downside one and use that to extend back down deeper into this range. And there's a fair value gap sitting down here. When you're in consolidations, you can see how you say, well, that just keeps switching up. You could say that it could go either direction, Darren. I'm just trying to give you the logic behind what I'm looking at. Right now, you're sitting right near equilibrium. What decision do you want to make? Do you want to go short? Do you want to go long? This one says short. This one says long. You're in a consolidation. Are you wasting your time, or are you getting beat up in here? Because if you keep gambling on, we did not get a high taken out here. We got this little high taken, but that wasn't. So we have a small little break in structure, back up to rejection block, did not extend the range any higher than supporting this to go higher. So watch here. You want to see if this holds now. And then you got the one just above you. Those are the two you want to see use leverage to go higher or lower. Will I be looking at 15-second only now? No, I can look at the 1 minute if you like. I like using the 15-second because it tells me early whether or not something's going on. So we have no break in structure on a 1 minute. We have a reversal. We've traded back into the reversal. You can come all the way back down to the bottom. It would be nice to see it stay open. 50% of the wick. Yes, no. And then take out that high and run back into that range. So far on a 1 minute chart, you've got a reversal. If it gets below that level on the close, then we're going lower. We're going for these lows down here. it'll retap the low and then start running lower. So right now we're still in a bullish tendency in a 1 minute chart. You notice how on the 15-second chart, we're already starting to close below that level. So that tells me already early that we're going to run the liquidity here. And then we're going to start looking for the liquidity down here. Keep your eye on this one above. Run to a premium to go to a discount. It's already giving me an indication it wants to go lower. Craig, bearish, bullish? Which one are we talking about? Oil or natural gas? Or, sorry, yes. Sorry, NQ. So we could just come up here, gather up this. We're still internal range liquidity. We are getting hints of going lower. So watch here. If we lose this on the upside, then changing my direction. We've got to take this on a close to the upside, clean this liquidity out, and then we'll see if we start running highs, lows. We got relative equal lows, relative equal highs. On the 1 minute chart, we still have that bullishness. We've come down into bullishness. So if we take these two candles on the upside on the close, then you're back to bullishness again. On a 1 minute. 15 seconds, see how we've closed above? This was giving us the hint to go lower. It didn't. Went higher. Took that high out. Used that for support. Now you're looking for these highs to get taken. And look for a body to close above here. And not just a wick through. Otherwise we're back into that consolidation again. Bodies above, wicks come down, give it a touch, go higher now. Your 1 minute chart. Pull your fib tool on your 1 minute chart. 50% right there. So you're paying, you haven't got your discount yet. Unless you're just saying, I don't care. As soon as it closed above that candle, give it a kiss and then start going higher. %, move to break even, move to 60. The moment it taps that, you'd be moving to 50, or sorry, 60. Your break even right now. Take a portion off. If this reverses and comes all the way back down, you're looking for optimum trade entry reversal. Consolidation. It has to accelerate really quickly to get through here now. It's already done all the work in here. So it's either going to accelerate rapidly in and through this fair value gap and start running it higher. $10:30 news release. They're right at 70. See that? So if that rips back against you right now, that's trading internal range liquidity. And it would have tapped you out right there. You take a portion off at 70, comes back, move your stop loss to 62, it takes you out. And then you move to the sidelines and say, if it rips up there, don't beat yourself up because that's the model you're trading. If you're holding it for a run above these equal highs, then you won't use this method. It's 10:30 now. There's a small little imbalance to be right here still. There's an inefficient delivery of the buy side so far. Look up to the 9:30 opening fair value gap initial presentation today. We can hit that, go through it, and climb higher. Great, but look for that for an upside objective. UMass, gotta go have fun hanging out with you all today. I have a 5-minute fair value gap of about 24.70. I think that might be the missing target. Yeah, initially the fair value gap initial presentation, I think, is that fair value gap fill right here. That'll put you just above that initial opening. And then you said 470, Derek? 470 on a 5-minute. Let's look at a 5-minute here. 470. Yeah. If we manage to get through this candle, I'd like to see us use these candles as support to go higher. And then you start to look up in here at 470, that range that you're looking at, Derek. I like it. We could see a reverse back into this 5-minute. If this candle's bold enough to run all the way through that, then I look at this candle to enter in on to go long inside that range. Looking for all this to get taken to the upside. There's the Wednesday's opening. See how it hit it nicely, smoothly. It holds off on that candle. We just get a bit of a retracement. Where could we retrace to? You see that push higher now? You get a nice big deep run back into this range before going above those equal highs. You say we've got to use this for support to get on top of it. Your oil has done your little breaker. You've run this little high out inside that fair value gap. And on a 1 minute chart, smack, 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 watch these candles here to get taken to the downside in the break in market structure. We get taken to the downside. We don't get this one candle displaces through this one and through this one. So this is the next group you look for. We get a body breakthrough here, and it does right here, trades back up right to it. No, it doesn't. You don't even get an opportunity to get in on that first short there. That just reverses rather quickly. So trying to find, is there another one in here? I think I can see another one right there. You got to be studying these things and be prepared to trust them when you see them. Right there. See that high? There's a little imbalance or a little gap right in there. You see that? Right there to there. You ran through it, and look at that. You run right back up inside it perfectly for a short. That's the one I didn't see. So you want to see this get taken to the downside, because there's the reverse. Right? We didn't take out a low though. This is the big reverse you're looking for, because we took out the lows on it. So this one was going short, this one was going long. It takes it to the upside right there, closes above it, comes back in, gives it a little kiss right inside here. Continuation, take out the high, pay yourself there. Imbalance. Goes higher, extends one more time above that. Look for a trade below here. It trades below. If you're looking for a small little reversal even higher, it's right here. Again, you have to be watching this, and you have to decide whether or not you trust it enough as a reversal. Again, there's no market structure break until you take out a previous swing. But here's an imbalance right here. You've taken out this high right here, trades through it here, takes out this low, returns to the low, also takes out this imbalance, comes back, fills the imbalance, hits the low, continues going lower. And it was hitting an objective that we were looking for a potential run back into this range, which I was warning you guys about. If you would have trailed your stop loss up accordingly, there's 79%. It would have come back and hit you at 75. You would have had maximum profits to 75% of the range. And here's another entrance for a long. We've come all the way back into that reversal, taking out that low. Now you're looking for these highs again. So go down to the lower time frame. There's an imbalance right here. Lows were taken. No, I don't see anything major there. So in the higher time frame, 1 hour, we had the reversal back into that perfect level that you want to get. Not perfect level, but it's a level 1, 2. The perfect levels here. If it came back, hit that, and you saw a nice little snap off of that down here in the 1 minute chart. Be a nice little run back up for these equal highs. But there's your first entry, second, third, stop loss sitting down here. As soon as it gets to 50% of that range again, right now you'd be break even, and see if that rips back against you. Take off half your trade if you use that method that I was showing you. That's oil. See that first initial presentation to an important level? So you're calling for that here, and then you want to see it get breaking through it, and it doesn't. It comes back, finds support in it. We traded below it here, traded back into it here, and so far we're rolling over. We have to get through that, find support at it, and then I start running for these equal highs here. Thank you for the education. It's priceless. You're very welcome, Antonio. You're very, very welcome, my friend. Went long at 24.18 and targeted the 1 minute fair value gap at 24.31. I'll take it. Good. And you have to be content with that being an upside objective, and you're just trading internal range liquidity. If that's how you trade, if you're an internal range liquidity trader, be content with that. If it extends beyond it, then you look for these levels here and you go, well, if it runs above that boldly, not just a wick, and closes above here, and use that, I'll use that as support. My stop loss will sit here. I don't have to be way down here, because if it breaks this on the downside, and I see a fair value gap forming in here, and this becomes the order block that I get support off of, and the break in market structure to the downside, then that's all well within my stop loss. I'll look at this candle now and go, oh, this swing here could be future break in market structure to get back into this range. So if I see a nice bold candle get above here and use this as support to go higher and take out these highs, I'll pay myself a portion there, move to break even, and wait, because this is the potential break in structure to the downside. That's where my fail safe will be. So you're already anticipating how price can reverse on you, but it has to get, in order for that to happen, it has to get above here and has to use this as support as well as this. So if you read it enough, that's what you're looking for. And if you don't get that, if it just hits here and continues to roll over, then you're looking for this candle. Is it going to provide support? That little fair value gap there, you want to see that stay open if you want to go bold or go long. And if it rolls over, cuts through that and eats through this candle, then we're digging deeper into this range here. So there's a fair value gap below you. There's a 15-second level there. So whatever time frame you want to trade on is the one you want to look at. That's the one you want to focus on. I like the 15-second chart just because it moves a little quicker. And you can see the setups happening on a 15-second chart, obviously, because it gives you your setups 3 times faster than this one does. So far, a little bull candle or a little bull flag. You want to see that hold? Good. So see it. Now, this is the scenarios I gave you. So you want to see this bold candle close above this, not just wick. There's the rejection block. $12. That's the consequent encroachment of this wick. There you go. Bold. Come back. Give us a kiss. And now you want to see that extend higher. There's your kiss. Take me to the prom, baby. Take me to the prom. Now you want to see this candle get closed above. You not ask for precision? That's not the precision I just gave you. What you wanted to see has happened. Took out the highs. Study price action, my friends, and you'll see exactly where you want price. Just give it a kiss, leave it open, give it a kiss, and away she goes. Takes out the high. Pay yourself. If you've been working this reversal here, and you've got in long off this reversal at 10 o'clock, your silver bullet, whatever, and you're running up higher, and you're looking for any reversal that supports a change in direction. You hit internal range of liquidity, you traded yourself on the way up, you left a piece on to run. So if it takes out this low, what we were talking about, if it takes out the low, then we're dipping into the range and I'm on the wrong side of this and I can close out this long trade. I can leave a piece on if it closes above here, which it does, and continues to go higher. So you leave a piece on to do more. And as soon as it takes out that piece there, you leave the last piece on to run higher into the range. But you're constantly looking, your fail safe is where is it going to fail for me? Where would I be on the wrong side of this? So my long, what would it retrace back into? And can I get in on that for a short? And then can I get the next reversal on the way up? And you just keep catching these reversals. But if you study price action closely, you'll see where does it fail for me on a 1 minute chart? Where do I find support? And where do I want to see it continue to run to? And if it doesn't run to where I expect it to go, so we're looking for this new weak opening gap above us again, all these imbalances from previous days. There's a volume imbalance and there's a fair value gap above us. We've run these highs out. So this is that reversal. Remember I was telling you when this candle was forming, I was talking about this could be a future break-in market structure. If we see a fair value gap above us, it took that high, there's your fair value gap. If you take that on the downside and then start running back and take this out and break market structure, we're coming back into here. So we talked about all of this setting up when this candle was forming. We talked about that hitting that and then leaving, extending the range, taking out those highs. We want to see a body keep driving up. You don't want to see these little wicks. So prepare yourself for this to fail to the downside. Confirmation is here. So there's your change in direction and your reversal. And the swing reversal is when you get a break in structure with that, taking this candle, coming back into it, and you're trading back inside that range again. If that makes sense for you guys. If you like what we're doing, hit the thumbs up. If you're new to the channel and you're looking for a community of people that just love trading ICT stuff, then you found it. There's no drama here. If there's drama, you're gone. We don't like trolls. We just, no drama. Nobody sits there and hacks on each other. We're all here to help each other out. The Telegram channel in the link above is just filled with people that are smart people that just want a community of people that trade ICT stuff, like-minded people. We don't trade retail. We don't talk retail. We only talk ICT stuff. So if you're a retail trader wanting to get into, you've been frustrated with your trading and you want to get into some more precision, you're seeing it here on a 1 minute chart. I'm showing you a level of precision that you're just not going to find in retail. And that's all because of what Michael's taught us on ICT. I take no credit for any of this stuff. He's the guy who's, see how we're starting to eat through this now? Highs are taken. We could be returning back into internal range liquidity. Watch this candle and watch that low. See how we've traded way below it now? And we're closing, if we start getting below this on a close. So you wait. If we can trade back up in here, the ideal place is right here. Because if you're wrong and it trades through on a close, comes back, taps it, that's your chance to get out because it's going longer. So here, watch this. We want to see a body get below here and a body get below this break-in structure. So we've called all of these candles, found support, extended higher. If we lose that on the downside, which we just did, we talked about this whole structure forming when we were over here. And that could be the reversal back into the range. Well, there you go. You've traded below that. You have a structure break. Now we're coming back into the range. Now you say to you, how many of you are sitting there going, how could I have got in on that trade then? You can't right now. You wouldn't have got in on it there. You wouldn't have got in on it here because it did not have a body break till here. So you wait for this to come back into this range here. That whole little pocket of cash there. Then you look for fib tool from here to here. Then I look for my little larger range here and I put my little magic box down here. And that's my area of interest. For internal range liquidity, that would be my internal range liquidity hunt. Initially, you're looking for here. Actually, it would have to be like right there. I know it's a huge box, but you'd have to get back up in here to get a discount. You wouldn't want to take that. We have to close below here. Is that 50% of the range? You might still be able to get it. Not that you're going to take this trade. We're just talking. We're just talking right now. Traded below it here. You're above 50%. You're looking for a box below you here to reach into. Just tap that 50% of that large range right here. You want a nice discount to get down into here. So I'd like to see it come back into that candle. If not, I'd leave it alone and wait for a new setup to come back in. Either extend this range up higher, because now we've got relative equal highs above us. We still got relative equal lows below us. This is a high resistance liquidity run here. But we have on the hourly down here, it's still flat. So I don't think they're going to leave that untouched. So now this internal, there's 50%. It just popped below the 50% into the discount range. Now you got to return back up. If you lose this candle on the upside, so look where that wick is. That's where the upside. You want to see that left open now. And you don't want to see it retraded back into here. Did we get that low? No. So now we're at 50%, looking at 62. There's the box hit. That's the top of this candle here I look for. And now you want to dig into that candle and this fair value gap fill. And there's a little guy right here. And then we start getting all the way back into the first initial box I was drawing you out, which is right down in here. So I'm going to the top of the level here first. And then as they eat through that candle, that's the downside box. So this would be the ultimate objective. If we can get through that on the downside, we're extending the range again further down. Girl, that's right. We used to trade the carrot all the time, didn't we? Let's put the carrot in the box. We've determined, my friends, that the algo is a vegetarian. It's not a meat eater, it's a vegetarian. And if you know where the carrot, to put the carrot, the enticement for it to come to the carrot is always so great. Looks like an order block here. Yeah, it's that initially you want to see these run above the old high there, come back, tap it like that and go higher. It did that. So if we're coming back to tap these two candles again, that's a mitigation. It doesn't quite take out these lows. It goes low, goes, and then just continues to go back higher. So if we just mitigating off of here and then going back into the range, that's fine. I like to see it get back through this because we've already hit it once. We have a fair value gap above, below us and another little fair value gap here. We did not take out this low for this reversal right here. So that candle's the one that you would be looking for if this low had taken, or this swing had taken not that low. I'd like that one for a reverse back in and use this candle to go higher. So we'll see if our little, our little box gets hit, our little carrot gets hit. It did it? Meatloaf going through my head. Didn't quite hit Tuesdays. We did hit today's. See this high right here? That high. This high was taken right here. Reverse. Look at these candles here. They're traded through on the downside. And you come back up, hit this low. Beautiful, perfect entry right there. And you need to see that, you guys. That low right there. Draw it out. Shift. Perfect. Perfect entry for a short. Run these lows. Very nice. Now you're looking for any type of reversal here. So if this reverses, now you've taken out this thing. I think your downside objective will be right here. Still come down a tad bit more. I'd like to see that. And then if we extend beyond for 345, 345 on a close, 345 right there, it just hit the bottom of that box. So I would have put a little box right here. So 345, it extends below that. Now I like this. If we get above here on the upside, looking for a run back into that range again. That's what I'd be looking for. But there's your perfect entry for a short off of a 1 minute chart trading Bitcoin. Weekends, we just love, I love trading Bitcoin on the weekends. Great practice in here. And we share our charts on our Telegram so you get to see what it looks like. There's a full fill of that fair value gap here. And we're back to what is this, a daily? I think that's the daily new day opening gap. There's a volume imbalance right here. Tuesday's volume imbalance has been hit. And if we can get above 405 on a close, then this just retracement back into this fair value gap is all we're going to get. This ain't done yet. This is still a level that has to get through in order to go lower. So we could be just returning back into this range, and then you look for the fair value gap initial presentation. We got to get above 405 on a close now. And there's really no reversal here, so there's little imbalances. There's a tiny imbalances in here. If you look for them, see that right there. There you go. You closed above 405. Come back to 405. If we get through 419 before hitting 405, you put 30 contracts in that? You get. Who are you trading through? Are you trading your do you have a specific broker that allows you to trade that many contracts, or are you just demoing that? There's the return to 405. There's a little imbalance right here. I don't see anything else down there, so we didn't take, well, we took a swing here. Not happy with that. I'd like to see that climb a little higher than that. We'd have to take out this candle here and this swing to go lower. Keep in mind a little box down here. If you're looking for liquidity run back inside this range, you see that there? There's 50%. We haven't even hit that yet. Highs take a little swing here. Change in direction. We take out that low. You're looking for a run back down into here. Just wait and see if that takes that out. That's for pulling people offside. Trade it back into this order block here, fair value gap right there. The carrot is still waiting for you, my friend. We're 3 people away from 1,000. See how we're trading? We've now traded below this level, that candle. I would expect to see this or portion of this fair value gap here to stay open. And I'd like to see that. Mind you, can come all the way up to there too. I want to see that candle hold price. We haven't broke structure to the downside. We have taken that candle out on the downside. Bodies are still staying inside it. We've got a wick just above that high. Now you want to see that just come right back down though. I want to see this candle's wick, 50% of that wick stay open. And see this just keep pushing down now. And it needs to accelerate quickly through all of this. Waiting for someone to light the fuse. Let's get a body below this low here. Yeah, the wicks just got below there, and that's a there you go. You want to see it accelerate? Give that a kiss. Nice. There's the first time. Come to the carrot, my friends. Come to the carrot. And we're calling this objective from way up here. Come get you some carrot. That's internal range liquidity. And you don't need any big bomber runs. We talked about this whole setup. We're looking for this all to happen when this candle was forming. Go back through the chart, you'll hear me talking about it. And then we talked about this taking out the high and this candle and that candle being taken to the downside for a run into this internal range liquidity. It did. Then we talked about it running back down to the discount array, which is right here, and it's just hit it now. So it wants to, oops, sorry. Let me reverse that. Put that back to where it was. There you go. I just want the carrot. I just want to move the carrot over so it's literally eating the carrot. There you go. Now I want to see it feast on the carrot, a little nibble. Now we'll see how it acts on the other side of that carrot. Feast on the carrot. Love it. All right. We'll stick the carrot to the side now. Now I want to watch this because then the carrot shall go down too. Take out that low. You want to see a body get through here. Wicks can do some damage into the rejection block. We're in hit the rejection block now. So if we get the carrot, get this close below here. There you go. Big drive now through the mean threshold of this, or the consequent encroachment of this wick. Just hold up on there, let that finish, or are you just hungry for carrot? Come back into this level and start driving lower. You would a rabbit. There you go. There you go, my friends. And so where's our next level? Next level's down here. And it's right there. It's right on that low. So you can see how this is an important level. Came down, stopped it, hit it, came back to 25% of that range, and then continue pushing lower. I love it. I love it. It's price action, my friends. That had nothing to do with boardroom meetings. That had nothing to do with the other 100 different companies that's all agreed that day to stop trading there and start going shorter. The wick, the carrot was stabbed, skewered. We have carrots on a skewer. Oh. I'm out of here in a few minutes. Got to go for an appointment. Oof. Don't know if I agree with your method there, Hiron. Don't know if I agree with that at all. All I can hear is you're motivated by money and dollar bills, not by logic and reason. Who gives a crap about 40 contracts, man? I don't care. You shouldn't care either. You just want to see the big money. That's not what you should be focusing on. At least I don't think so. That's just my opinion. If it helps you, you get motivated from it, and it works for you, go for it. All I hear there is money. I don't hear setups. I don't hear any of that stuff that supports. All I hear is money, money, money. I got to do 40 contracts. Yeah, I nailed $5,000, 50K. Who gives a shit, man? Did you get your setup? Did it hit perfectly where you wanted it to? That's what I want to hear. I don't care about your money. I don't care how much money you guys make. Did your setup hit perfectly where you wanted it to? Did your fail safe work? Did your stop loss work? That's what I want to hear. I don't care about the money stuff. It's nice that you're motivated by that, but I'm motivated by precision. I'm motivated by calling directions before they happen, while they're happening. That's the kind of stuff that juices my onion, man. But I'm not saying that mine's better than yours. It's just we all see things differently. And if you like 30, 40 contracts and that makes you feel like ICT, this makes me feel like ICT when you can call every candle like that. So we've taken out these, we've come right back to that low there. We've hit it. We're getting a bit of a reaction off of it. So pull your fib tool inside that range or inside, I would prefer that one. Look back at this fair value gap here. I wouldn't want to see it get above here. That's more than 50% of the range. You've got a swing low, but you want to see market structure break to the upside if you want to see that run back up above these relative equal highs again. So it's quite a ways for it to go on a 1 minute chart. Otherwise, we got continuation on the downside. See that right on 3? Did that hit low? Let me just move that out of the way. Oops, move that out of the way. Nope, we didn't hit 3. One night together when I know it. We did hit 3. No, we didn't hit 3. 2.5. 4 is down here. So if that would be my next downside objective, would be right there. You can see how this order block here, where you got that little swing, I'm not crazy about that little high. There is a reversal or swing there, so there is a reversal order block. Traded below it right here, trade back up inside it right here, and then go lower. We looked for the downside. We gave you that setup right there as it was happening. We talked about we didn't want to see it get above that mean threshold of this wick, and it didn't. It held, and then literally precision. That's the kind of stuff you got to talk about. It's the kind of stuff you want to see in your charts. That's studying price action so that you have further downside objectives. And it just continued. So if that was your setup to go in, where's your fail safe? Where does it go wrong for you? Where does it fail for you? Look for this carrot. Look for this downside objective here next. I would not do that. Trade what is realistic for whatever real money you'll be using. You're not ICT and you will not be able to trade like him in all his wisdom and experience. I was long off of 370 level liquidity zone. It's only one eval still alive. Okay, Scott, that's an interesting perspective. It's 370. Let's break it down. If you want, I'll break it down for you. I do not want to pick on you. I do not want you to feel like, you know, I'm trying to make you look bad. I don't want that at all. If you want to do a little education piece there, I'll go over it with you, and I'll explain it on here for you if you want to see where where your fail safe should have been or could have been to protect your stop loss. If you don't, then I won't mention anything about it. LOL, I agree. Thanks for everything, D. Gotta go. Love you, Abs, man. Thanks for coming in. Yeah, pretty clear that Michael could give you 1,000 examples of people who failed that way. If you were long at 370, yes, did not take your profits earlier. I'm sure eventually ICT will pop into your stream and give you props. You really know your stuff. I don't know of any other person besides ICT who calls candles like you do. Thanks, JC. He's been in here 3 times. So we've been fortunate enough to have him in 3 times. But I haven't been calling it like this. When every time he pops in, you get all nervous, right? So next time he pops in, I'm just going to ignore the fact that he's in there, and I'm just going to keep calling it the way I have. And then I will invite him to criticize I know I'm terrible at calling inversions, like calling it the proper technical stuff. Whatever I'm pointing at, that's the logic. And I try to explain the logic with every candle. So I may not get the term. I haven't focused on the terminology as much as I should have to give you the, I call everything inversion or fair value gaps. Sometimes he calls it a reclaimed bullish fair value gap. And that I've got to work on the more technical side of it. I just go, yeah, whatever you call it, it's coming off of that and it's going in this direction. And I've been doing this for 8 years, so I haven't focused so much on the terminology as reading the ECG. That's the paramedic side of me, man. This is an ECG, and all I'm trying to do is, I don't look at that and say that's a P wave. That I just go, that's an infarct. That's an anterior descending myocardial infarction. That's a circumflex artery occlusion. That's a posterior MI. That's a right coronary artery injury. I can tell that by looking at an ECG, which blood vessel's been plugged in your heart. ICT has videos only trade when he is teaching, so I know I can't trade like ICT because he's never shown it. But I do need to desensitize myself, bigger positions, so I took this opportunity to come back. Okay, it's an idea to desensitize yourself. But if you desensitize yourself to large trades, then the desensitizing is getting yourself in and out of trades. Desensitizing yourself on money, to me, is not the right objective. Do his example he gave you. Every time a low is taken out, every time a swing trade is taken and there's a fair value gap formed, enter, do a demo trade, enter long or short, depending on the low or the high that was taken, and just reach for the next objective. And if you get taken out, to the next one. That's what you should practice on, desensitizing yourself, not on price, on entering and exiting based on logical, sound levels. That's my advice to you, my friend, not money. If you desensitize yourself on money, when you put your own big money at risk and you're desensitized and you don't look for logic and reason, you're going to blow your account. It's going to come charging down and you're just going to crash, lose your money, and you go, yeah, oh well, I just lost 50K. And you're so desensitized, you didn't look at the technicals to say, hey, look, you don't need that. That's just my advice anyway. Your psychology doesn't make sense to me, but it's not mine to judge. It's just, I wish you all the best and I hope it works for you. On a demo account with retesting it like I always do. Scott, yes, please. Okay, so explain to me your entrance and where your stop loss was, Scott. I'll put it up here on the chart and we'll talk about how and where it could have failed for you and where's your fail safe. And tell me the time frame you put it on. So quickly write down, I put my stop loss here, my entrance was here, I was going to go long, or my stop loss was here, I was going to go long, I was aiming for here, and I'll I'll show you where we'll kind of break it down and see where it could have failed for you and where you could have adjusted and where you could go, oh, I'm on the wrong side of this. Okay. So just look for all those things and don't forget to give me the time frame. So I don't want to jump around on a different time frame. I want to stay on the one that you're on. JC, really? I'm new here. That's awesome. Yes, please explain what stop loss and take profit to go. Yeah, I'll do that in a sec. As soon as Scott gives me his levels, I'll go through it. Russell, Hiram, bro, you should demo trade how you would trade in real money. I demo trade one contract, which is what I use when I trade with real money. Putting 100 contracts for demo just to see what 100 contracts will do allows you to focus on the wrong thing. Darren, Stuart. Did you just have a heart attack, Stuart? You just got Darren Oh, he's in there a little further down. Okay, thanks. Thanks. I had a limit order these. They're expecting it to kiss it and bounce and just guesses the zone up. Heart rate bleeps works for us. Iron, you are right, Russell. Has been my approach, but I'm aware of my downfalls, and one of them was the extra stress from bigger positions. When I have to mitigate a trade this week, I'm desensitizing. Hiram, listen to this. Listen very carefully to what I'm telling you. If you have a logical level and you're understanding price action the way you should, if you see it as clearly as what I'm trying to show you here, all that other stuff doesn't matter. The stress is gone when you say, here, we break this to the downside on a close. I'm okay for this to go short now. Carrot, put the carrot down here. It doesn't matter. Aim for another objective down here. I'm okay with going short off of this because this is where I want to find support. Off an old low, off this low here. I don't want to see it get back up into here. That's it right there. I want to see that stay open. And when you see price action, you can feel confident putting a one contract in there saying my fail safe is going to be right up, or my stop loss is going to be above here. My fail safe will be if I lose this candle on the downside or on the upside, I'm looking for a larger range. If I lose it right here and it comes back and gets me out, I've just paid some new information to go longer. See, it keeps coming down. I've broken my structure. When you understand that, your stress level drops and the money doesn't matter. Your setup matters. And you'll find all that other desensitizing stuff. This is where you start to get desensitized, when you see the logic behind every one of these candles, right? If you don't, if you're chasing, you're desensitizing yourself against loss. You're desensitizing yourself against the wrong thing. If you focus on, it's like they say, the more you focus on what you don't want, the more you'll get what you don't want. It's like people say, I don't want to see this. I don't want to see this. I don't want to see this. Well, that's what you get. This is what I want to see. This is what I want to see. You're going to get more of that. Focus on what you want, not what you don't want, and you'll get more of what you want. That's just the basic law of attraction. And this is price action study. So this could pull all the way back up into that candle, and I'd be all right for that for a short. Not that I would take a short here right now, but I'm just studying price action. I'm out of the charts. I've made my money this morning. I've moved to the sidelines, and I'm going to wait now. And yes, there's plenty of opportunities I've been giving you along the way here that I find after 11 o'clock, I start to give my money back. The markets go a little bit odd because you start to get into that. Right now, it's lunch hour. So we've just taken out some old lows. So you could see a run back above all of this for lunch hour. So I want to see this market structure break to the upside to get back into this range. Otherwise, we're still going lower. That's what I think you should desensitize yourself to. Study price action, get really good at price action, and you'll find your stress level goes, boom, drops right down. Darren, I'm up again today because of you. Thanks. Your practice again reading is invaluable. What is the VI in your chart? It's a volume imbalance. a volume imbalance. D, I agree with you 100%. Demo callers and real dollars aren't the same. They're definitely not. Try it with one contract on real money and one contract with demo dollars and let's know how different it feels. Paulette, I'm tape reading with you today. Truth, Derek. I like the carrot on the screen. The carrot has been with us for a long time. I just haven't used it lately, so it's nice to have people remind me about the carrot. I was going to get t-shirts made up with the carrot. I got AI once to, I've actually got a nice little thing. I had this carrot riding the candles in AI, and I was going to make a shirt and put it on here and sell it as this carrot, like, yeah, it's riding the candles on the way down. I thought it was, I had AI come up with the idea. I thought that's pretty cool. I was going to put that on a shirt and said, I ride the carrot. Theta wave carrot. Obviously, I'm still in demo only because I'm working on my trading psychology, the model and the knowledge. I have it down, but not my emotions. So I'm using demo to work through my emotions, downfall, not skill. Okay, Hiram, I'm not going to bug you about it anymore. I apologize. I wasn't trying to upset you, but if that's your thing, that's not for me or any of us to tell you otherwise. Stick to whatever you need to get through the psychology to work for you. That's just I'm not saying anything more about it. So I wish you well. And you guys everybody else just kind of leave him alone. If that's his choice, that's his choice. We're not here to try and push our views on him. We've given our advice. It's up to him to choose what he wants to do. You need to make money not matter when you enter a trade. You need to make money not matter when you enter a trade. I don't agree with that, Russell. You totally need to understand where you enter a trade. Money doesn't matter. That's just my opinion, Russell. I'm going to Russell now. Totally don't agree with what you're saying. Is your magic box on the 4-hour chart? No. 1410 candle on October 7th. My magic box on a 4-hour. No, I never use 4-hour. I don't have a magic box down here, I don't think. Do I have a magic box down there? Let me look at the 1-hour here. Nope, I don't have a magic box here anywhere. But if I was on a 1-hour, where would my little box be? Where would my little box be? Mr. Boxby would be I'll put it down over here. Mr. Magic Box, we could put it to here and to here. That's the next side of the magic box. In a larger range, that's the next downside if we're going to eat through all this crap here. Let me get through that, remove that. The carrot would be down in here on a larger, if I was trading a 1-hour candle, that's where my lower time frame objective would be. But we need to get through that candle for it to continue running through here. That would be my box I will put down there for you guys. Got my trade in. Woohoo! Complete counterintuitive because we trade to make money, but one will not last if you can't do so. You're an artist, you do it. Draw the carrot. Yeah. I'd have to airbrush it. I get all into obsessing over airbrushing it. Then you got to go pay someone to go out and design or get shirts made and just get it all done. I could send the design to Etsy or something like that and then put it up on there and say, yeah, go buy a shirt there if you want it. Hey everyone, hope all is well. I was looking for the sell I was looking for finally happened. Mark, good for you, Mark. Well done. Did you get a nice entry? Did you get the entry you were looking for? If you did, good for you. That's all I want to hear is your setup worked exactly as you wanted it to. I don't care about your money. I just want to know if your setup works well. Is your price action study working? And how precise? I'm more impressed with how precise your entry is. Did it hit perfectly where you wanted it to? Tell me about it and we'll set it up. I'm still waiting for, who was it? Scott. Give me your setup there and I'll help you through it. If not, that's cool too. We have a PWL at 2205. $22.05. We have a weekly. This looks like a weekly new week opening gap right there. That could be the draw. For sure, because inside the new week open, just below the new week opening gap is my box. My box. My magic box. Hoo-ha, the magic box. So if you're looking for a swing, we want to see it get above here. Break structure. Previous week's low is PWL. Two people. Come on, man. Two more. Two more people to make 1,000. Let's break 1,000 subscribers today. Whoever's next is my 999. Who's my 999? And tell me your name. If you're 999, tell me your name. And if you're 1,000, tell me your name. You'll go down in my book. You will live on in infamy, my friends. And if you're new to our channel and you like what we're doing here, please hit the like button, subscribe. You're welcome to pop in. I will bring my wife. Okay, do it, Hans. Order block. High, trade below it. Remember, we're looking for it to trade back into this. It's trading back into it now. I want to see this roll over here and come back down. Now, here's the difference. One, to trade lower. You want to see it trade back into this to go lower. And two, you've got a reversal here to go higher. So if you've got two overlapping signals here, one signal says, I want to go higher. One signal says, I want to go lower. I like the idea of going lower, even though we've taken out all these lows. Anytime we could get a reversal, right? So we've got 300 is the next level down. That would be a perfect fill of that fair value gap down here at 300. And that's a big figure level. And that's sitting right below our, is this another box I had down here? I got so many boxes. Sometimes I put them in yellow and sometimes I don't. Where is this sucker? Let me go on here on the 5 minute, 15 minute. Ah, it is. What is that one? I don't know what that one is. 1 hour? No idea. I'll get rid of it. Doesn't change how we, doesn't change the price of tea in China, my friends. So here's where you want to see it roll over. If you want to go short, if you want to go long, all of those who are looking to go long, you want to see this fair value gap hold price, and you want to see this break. Then you're back up inside that range. You did not get an opportunity. And again, you've got to trade internal range of liquidity. You're looking for these small little range that you're in. So I would look from here to here. And I would say, in order for me to trade this, oops, not equilibrium. I want the retracement. So if I was going to go long here inside this range, I'd have to be in on a short, like right here. I'd have to be in this to go long. And as soon as it hits 50%, I put my stop loss to break even. Take half my trade off right there. And from there, that's 20 to there is 30. That's 10 handles right there. Done. And you break even. So you take half your trade off with 10 handles. And now you're looking for, if I was going to put a magic box, I'd put it right up around 70 to 75%. That would be the upside. So, or if you're using the fib tool to trade that little spot perfectly off there and it trades up, break even, 50. As soon as it hits 62%, you move to 50, you're in profit. You take another portion off there, it comes back, takes you out. That little tiny internal range is just another small example of what I show you on the larger frame. And if this is a short, you just made some money right there inside that, using that fib tool to be on the wrong side of the trade that is now going to go short. You see how that's a nice little way of protecting yourself, as well as that's trading internal range liquidity. And here's where you can see it's an overlap, either higher or lower. You can argue both. So any logical person will move to the sideline. The greedy person would be trying to snatch every one of those. And if you use my dots, that dot lines up perfectly on that entrance. Hits. Now we're at 42, so next one's 45. If you're pushing through here, look for 45 to make a new high. That's 44. Just hit that subscriber button for you. Butterkeeper. Butterkeeper, are you my 999? Nope. It still says 998. I see people canceling their subscribe button and then hitting the resubscribe button again just to be 999. Just put me over 1,000 already. Come on, let's go. Got 50 of you, new people. Come on. Hit the like button. I like what we're doing. I'll hit the like button. There, I hit the like button. I like what we're doing. So we're sitting right inside this candle right now. Midpoint of this range. So you're literally running higher or lower. Which one? You're gambling. If you went here and you're going long, look for that little box, the magic box up there, that's 70 some odd %. If you get above this, then this low has settled in for the moment and we're getting back into that range, the next range up. If NQ closes below 301, is confirmation for you on the daily chart. We're bearish, at least short-term bearish. Well, if it gets below if it closes below that, then we're going to continue going lower. And we're just looking for this reversal here now. This may be it right here. Just stopped at that 300 or 303, just shy of the filling of that little fair value gap over here. That candle's high on the hourly. That candle's high is 300, big figure. It's a big figure level, so it's literally sitting right there. So there's the upside box filled. Now you wait. So that internal range of liquidity trading from entrance below in a discount to the premium level inside that is 20 to 50. There's 30 handles in there, just from there to there. Now, if you're looking for here, you want to see, did it close above or below that? See how it's closing right on it? It comes back inside it, find support, go higher. There's a little tiny imbalance there, I think. It looks like an imbalance. Yes, it is. There's a little imbalance right here. I want to see it get above that one now. Did we hit 100K or 1K? Woohoo! Woohoo! Welcome everybody to the 1K club. We hit 1K. 1,000 subscribers. Look at that. That's a day that will live on in infamy, my friends. Welcome, welcome, welcome. You can all say, yeah, I was part of the first 1,000 people. In a couple of years, when we've made, 150 million people in our subscriber channel, you guys will say, I was one of the first 1,000 people in here. See how we have not had a close above that imbalance? That's the highest imbalance inside the run you want to look for. So all it's done is just come back right up inside that switcheroo, hit it, and now we're starting to get back through it. So we're back inside this range again. Now you want to see this get taken. We did not take out an old high. Yes, that's a high taken, but I want to see that structure break and then reverse back down. This would be the consolidation. See how you can picture consolidation starting to happen now? Based on these little imbalances, do they provide support? Get above them, break the high, and now do we wick through that high? Or do we have a nice bold candle that creates a fair value gap? You come back and you can key off of that to run higher? Or does it create a little fair value gap and you want to use this order block here to run higher? So watch how these candles act in here now. Because if you see it enough times, you can anticipate what you want to see. And if you don't see it, then good. Then we're back here. What's my next? Where does my eye move to next? It moves to this candle right here. And this swing is consolidation. This would be a CAM Model 1 entry for a continuation on the upside. CAM Model 2 would be inside the middle of that to go higher. And if you close a candle below 50%, your stop loss is here. If you close a candle below 50%, take your CAM model off because you're running for the lows. That's just my understanding of Michael's consequent encroachment or equilibrium of the consolidation. And you can see our CAM model study in my videos. You'll see it's the only video that doesn't have my main page on it. It's a clean one. It says consolidation attack model. And there's 3 different ways. Michael shows you 2, and I got a 3rd one that I like to use. If this wick took out that high, that would be a CAM 3 model. So 1 would be if it literally wicked above this, came back, took out that low with a body, came back into CAM 1, CAM 2, and 50% of that leg, CAM 3, leaving a portion open to go lower. Watch how we're reacting off of Wednesday's, the 16th inversion fair value or opening initial presentation. Fair value gap, run above it. Right here, did we go above it? Nope, we are getting above it now. So I do like this, like this. There, you have to, you have to include the imbalance for that to take out that high. Okay, you have to, oops, you have to include the imbalance. Oh, you have to include all of it, I guess. There's a little imbalance here, and then there's that whole thing. So you got to get above this, find support, get below this, and through this mean threshold of that candle. Lose that on a close, you're out of there. You're looking for another run back into here. So let's see if we can get above here. And you're in lunch hour. So we're expecting to see a consolidation and just run out a little high, come back into a low of the range. So if you're turning internal range liquidity again, not that you're trading that during lunch hour, but if you're going to really practice your lunch hour PD arrays and price action study, lunch hour is great because it consolidates and lets you understand ranges and what order blocks, what fair value gaps, what price imbalances sit inside those small little ranges. So you, instead of waiting all this time for the range to give you some setup, you get practice for a lunch hour inside a small little range. If you're smart enough to take your time and look at each one of these levels, you'll find where they provide support and where they don't. And it's a great little practice time. You don't have to put any trades on, just mark up your charts. Just mark them up and look for opportunities for price to move in the direction that you want it to move. That's a 52 candle. That would be nice to take out a high. Rejection block. Push up, take the high out, 52, and then come back into the range. It'd be nice to see it just come back up and close that in. That wick, 50% of that wick still, what that's hitting. 55. If 52 doesn't hold, look at 55 running for an objective. And if that objective gets taken, look for 58 to run up in here. $1K subscriber after party. Woohoo! I'm bullish. The minute took out 5846. Now we're above. So now we're looking for a return back into this level. Ideally, you want to see that go higher. You do not want to see this low get taken. Look at that run all the way through. 3, your ass is next. 1 candle takes out 3 arrays, your ass is next. There you go. Remember hearing Michael say that? If 1 candle takes out 3 arrays in one time, and your stop loss is sitting below that, your ass is next. And there you go. Literally ran right through. So if your stop loss was looking like this to go higher, it blew right through that level, ran right through this. The wick did all the damage, came down, and would have literally taken out your stop if you wanted to go higher. That's okay. You're in lunch hour. That's why you're not trading. So welcome to the, oh, sorry, here's your down close box inside that range. That's the down close box. There's nothing else below you. Right there. That's the discount array inside the larger range. We went from premium rejection block. You didn't take the highs. Pay yourself at rejection blocks. And then ripped all the way down to the discount array again. And now we want to see if it runs all the way back through here. Notice we haven't got a body through here yet. You want to see a body get through there? Yes, the wick came down, took you out. Oh well. Watch the bodies. No body through the mean threshold. We did have a wick though. The fact that we've eaten through that thing weakens that for me. Your cam model 1 and 2 literally took it out. I'd like to have seen that close below there. And then that can have been a cam 1, 2, and then this leg here for a 3, but it still didn't take out that high. So this high's taken. I'm looking at this now. I guess you could go to this one. And we're looking at that downside here still. We'll watch, see how it acts inside here. Remember talking about consolidation time during lunch hour? Look at that. Now there's always a measure of retracement back on. I do like the opportunity of this going back, retracing back against all of this, and lunch taking out those highs. We may see one more run down into here for 12 o'clock and then go higher. Let's see if that happens. Mr. Pips, I am the 99. Were you in here a long time ago? You're telling me you just subscribed? Mr. Pips, I like that. Congrats, Darren. Thanks, Campione. D, don't focus on the number 1,000. Focus on the quality of your subscribers. Thank you very much. Absolutely. I totally agree. It's not about the number. It's about the quality of the number. It's the quality of the people that made up. You guys have been with me since the beginning. Bless your hearts for sticking around. Poor Derek's put up with my crazy outlook on this price action for a whole year already. Abs has been in for a long time. Lambo. These guys have been in for a long time. So I love you guys. Thanks for sticking around. Mean threshold of this candle. See how we've traded above this imbalance? We come back. We're into that mean threshold. Find some support in here and start pushing through this candle. That's the discount box. Hit it. Ran it. Through this. Get through here now and use this candle as support to go higher. And then we're looking at that lunch hour run, right? My concern is that we don't just run above here and then come back into the range. So you have to stick with what you're seeing. So if we get a body close above here, inside that candle, so here, right there, that's a tap and go. So that order block there is what you want to see. We've closed above it. You give it one little kiss off the top of that old high here as well. That actual candle's close is higher than that one. So you want to see a body get above that. Find support at that. Inside here, stop loss would be down here. This swing, fail safe. So we say to ourselves, if we get a fair value gap forming above this, and we trade through it on the downside, this now becomes this thing here. That becomes this, or this becomes that. Trade through that on the downside, then we're looking for another run back down through here. That makes sense. So there's the first one. You've traded above it, fair value gap. We don't want to see it get below here. Otherwise, we're inside this range, and then you got that fair value gap. If you trade below it, through it, come into it, then close off your fail safe, because we're probably coming lower. There's that one, and then there's literally this one overlapping it right here. See that? See how they're overlapping one another? One goes low, one goes high. So you want to see this whole price here, right at the bottom of that. Leave this piece open and go That'd be nice if you leave that last little piece open right now and not fill it. It loses its love if it fills. But again, here's your long. So if you do get a retracement back into that fair value gap, like that, it's reaching in there now. It's inside that one, they're overlapping. So you can see how consolidations can beat you up. Now if you start trading below it like that, then you're on the wrong side of it. So wait till you see where that closes now. You want to see this snap out of here. I didn't want to see that fill. And I didn't want to see a poke below it like that. There. See that traded below it? Now it's going lower. Closed below, tapped it, looking for a lower, looking for a run back below this low. Stop loss was here, you're out. Don't even let your fail safe get hit. It's coming down. Your cons, this is how you see when price changes direction on you. So your ideal entry would be like right there, and you're like, oh, it closed below me. Gives me an opportunity to get out of my trade because it's coming lower. You got to be steely-eyed to see it. Congrats on a small milestone, that is. Thank you. Edgar, congrats. Yeah, subscriber quality has dropped substantially. Stopped out better. Screen to go to lunch. Yeah. See how we said it's going lower? And we knew it was going lower right there. That's how you can see when price action changes. And you got to see it enough to know where it starts to fail. You go, oh, this isn't good. I didn't want to see that. Remember, it loses its luster. I was telling you, it takes my love away when we're not feeling it. Oh, it comes through. The fact we poked through it, I don't like all that. Those are all examples of, I don't like to see that. And then when it gives you that, guess where I'm going? I'm going lower. Boop. Fail safe implemented before your stop loss gets taken. Fail safe says get out. You got out. Otherwise, your stop loss was run. And if you did one of those, I pull my stop loss, I think it's going to come to here. Oh, I think it's going to, shit, it took me all the way out. Well, it gave you the indication back here. And when it started to run through that, that's the first indication you're on the wrong side of it. Second indication, you're on the wrong side of it. When both of them fail, and this one to go lower, takes that out, you know which one you gambled on wrong. Just took out the highs. Now there's our 300. We've hit the 300 level. Remember, we're talking about lunch hour coming back. There's 12 o'clock. Comes all the way back. Takes that out one more time. Now you'd want to see that start running all the way back up. Right? Watch these two order blocks. If you get support off of these two and it keeps coming lower. Oh, by the way, our carrot, which was sitting over here. I think I had it sitting in here at 300. So carrot, skewer the carrot. Sorry, no, let me go back. I want to see exactly where that carrot was. It was at, yeah, right there. See how it skewered the carrot from there to there? I just want to make sure that I wasn't just form fitting that. As our carrot skewered. All right, so now I'd like to see this. I'd like to see them. See how hungry it is in lunch hour. Break through here. See this reversal, support, run back up into this liquidity range, and you're looking all the way back up here again now. For your boxes. It's got to get through here first though. Otherwise it's just coming back into this order block here and this fair value gap to find support off of it to go lower. Stopped out. What do you think, D? Could this move to take out stops be a signal that price is going higher now? Yeah, I'd like to see that, Derek. I totally would like to see that, but we need to get through these two candles here first on the upside close and through this fair value gap on the upside close to continue to push back into this range. Otherwise, this supports price to go lower. And then we're still looking at our big old box down here in our weekly, right? That's the draw. Right now it's bearish, so I'm going to stick with bearish until I see those two criteria get taken. And then if they do, then my other criteria is up there. Ideally, this is where I want to see it go, but down here is where right now it's more logical to go. Would you look at crude oil again? Yes, I will. Here we go. Crude oil. Traded all the way back up into this. See how we've got that little fair value gap there? You traded into it for the short. You traded back into the range. And again, you got to make sure you pull your fib tool on the range. If you're going to use my fib tool entry technique or managing, because if you don't know your stop losses, you don't know your PD arrays, you don't know your inversion, fair value gaps, and all that other stuff. Here's how you do it. You pull the range that you're in, either that range there or this range, the larger range. You pull your fib tool. So there's your entry for your short. Right inside here, you got 1, 2, 3 potential places to enter in on. The ideal one is right there, which is the top. No, not quite. Just a little tad bit short. So 1, 2, 3 entries for the short. Stop loss goes up here. And as soon as you get to 50%, which is right here, move your stop loss to break even. Take half your trade off. And as soon as it hits 62%, you move your stop loss from break even to 50%. So you're guaranteed money on all your trade now. Half your trade. So you only took half your trade off there, another 10% off at 60, 62% here. Move your stop loss to 50. So 10% of your trade is off, 50% of your trade is off. So 40% of your trade, if you hit 70%, you move your stop loss to 62 and it goes boop and hits you and takes you out. So you got another 10% off there. You had 30% of your trade left, came back, 30% of your trade closed there, all in profit. And you got 10% of your trade there for the perfect optimum trade entry reversal. There's another trade rate, another reversal. Now you've taken out this low. Trades above it, comes all the way back inside it right here. And now you want to see this hold price and start pushing back up higher for a run above these old highs and back into that fair value gap above you, equal highs. If it closes below here, you're on the wrong side of this. If it closes below, comes back up, taps it, get out, because you're running for these lows and digging big back into this equilibrium here. That's how I would look at that. So that's what you're looking at on the 1 hour, right? So you're hit a perfect place right now. So as soon as it comes back to here, you say to yourself, go down to the lower time frames and say, do I see a reversal from here to go higher? So go down to your 1 minute chart. We've got all these equal lows. So I'd like to see those equal lows get taken first. A wick going down and did this these two candles right here. They're open and close. If we could wick into that, I'd be okay with that. Taking out these lows, look for a reversal anywhere inside here now. If you want confirmation to go higher, wait for these two candles to get taken to the upside, and then you look for a run above the highs. Or look for the next range up higher. Imbalance, I like the imbalance. We've taken out that low imbalance. You come back, you give it a little kiss right there. I want to see that go higher now. I don't want to see that imbalance get taken on the downside. If this is going to hold, this mean threshold of this candle is going to hold, that better hold right there. So a nice little long would be in here with the stop loss sitting right below there. If it takes that out, then we're looking for a run below here because now your mean threshold's gone. So I'd like to see a run back up in there. So if it trades below that, right now on a 1 minute chart, if it trades below that, comes into it, we're going to take these lows and look for the regular or the rejection block and old lows. There, it's already trading through it. I would, right now, I'd be like, I'm moving to the sidelines. Break even, wait. I don't even like the way that's poking down in there. So we're looking for a run below these lows. Look for the rejection block and then the lows below you. Because now you could be looking for confirmation that this is going to run all the way through this and come back here. So wait till you see this. Close. And go down to a 15-second chart and see if there's a setup in there. 15 seconds. If that candle there gets taken on the downside, right there on a 15-second chart, I'd be looking for lower prices. That high's been taken. Reversal, order block, take it to the downside, look for this candle and that fair value gap to hold price to keep going lower. See, we're trading below it. Traded below it. Come back into it. Watch this one here now. This is how you can start looking at these higher level areas in price action. You go, is this a great place to get long? Nope, it's not. It's going to fail. It's failing on a 15-second chart already. See how we've taken out that candle on the low? And now you can say, I'm not going to go in that trade. I was thinking about going long on it. I needed it to stay above there. It didn't. You just paid for some new information. It's going lower. So, and there you go. Isn't it beautiful? It's a sexy thing, man, when you see it. So now, how do you say, how do I get back in sync with the market? As soon as it comes back into this fair value gap here one more time, taps it in the next hour or so, hits it and goes short, that's where you want to go. And you're already looking at this 15-second chart and say, when does this fail? When does this fail? And I go, oh, maybe that was just a wick and we ended up closing up, still up inside that range. We still have a potential to go higher. Where does that fail on a 15-second chart? You need to understand what levels fail for you and a fail safe. That's why I preach about fail safes versus fair value gap or versus stop losses. See how we got proof that it's going lower? I tell you, it's a magical thing, my friends. Now I was early 300. Oh, you were 300. Nice. Welcome. I'm sure I saw Mr. Pips a long time ago. Zach, congratulations on the 1K. Thank you very much. Thank you. Thank you all for subscribing. Thank you for all putting your faith in the show. I appreciate you guys turning up. Now maybe the algorithm will kick in and we'll get some more people to help them out, man. That's all we're here to do. Derek, Abs, and the boys, we're just here to help you get really good with your price action study. Helping you improve your trade model, take away your stress on watching the charts. You feel a little more comfortable in them. That's the whole point. Theta wave mindset, man. That's what we're trying to get you in. Not a person, it's a mindset. Bro, if I don't love it and think you were right on target, I wouldn't be here. Keep going. Thanks. Thank you, Derek. Butterkeeper, is there a possibility to go back to the consequent encroachment of the opening range gap? From here? Not presently. Not presently. But see, you got lunch hour, right? You're always looking for a potential for lunch hour to turn, and as always, like Michael says, From 11:30 to 1:30, there's a measure of retracement back on a range that was created, and all the people that are trailing their stop losses down here, there's a measure of retracement from 11:30 to 1:30. So this is not done yet. All this sitting up here, I don't think it's done yet. If we do get a measure of retracement, if we don't get it today, if today pushes the Wednesday low, Thursday reversal. Thursday reversal, you guys. Tomorrow is an up day. You check. The majority of the times, and I think it's more than 50% of the time, your Thursday is a reversal day. And tomorrow is 18, 16, 17. Yep, it's an 18 day. And 18 contradicts 17. So I expect tomorrow to be a reversal day. So I'll let it come down here, and then tomorrow we're expecting it to buck all the way back up, and then look at that daily regular trading hours gap we looked at for the consequent encroachment. Tomorrow's target, unless we start to shoot up after lunch here and making lunchtime low, and then start the run back up. Thursday's reversal can sometimes start in the afternoon of Wednesday. Like Wednesday makes the low of the week. Then you see that reversal happening on the hourly chart. And then you go, now guess where she's going for the rest of it. So I look on the hourly chart to see if there's a reversal going on. And where could you see a reversal in here? You can't. See how it goes down, comes back up, goes down, comes back up, goes down. So we're just getting a nice balanced price range. It just keeps going down, coming back up, but it's all sell side. See that sell side delivery? But I don't have a fair value gap, and it's not an immediate rebalance back up the other way. It just goes down, wicks all the way to where it wants to go, comes back up, and then runs back through there. See that? I want to go here, so it goes all the way down, comes back up, runs all the way through it, sets its new spot, comes all the way back down, takes out all those lows. So I don't have a reversal. So if I don't have a reversal on the hourly, I look on the 15-minute chart and I say, is there a potential for us to get back into this regular trading hours gap, which is sitting way up here? This is today's right here. Is there a chance that we can get back up into that consequent encroachment of that? On a 15-minute chart, I'd have to break these two candles to the upside, and then I'd start getting a little more excited. That's the range I'm looking for. And the same thing I've been showing you guys all the way down here on a 1 minute and a 15-second chart. You're looking for these two candles right here and that fair value gap. Trade through it, find support at it, push through, eat through these two candles, and then find support at them to start running higher. So your 15-minute chart's going to be your... we have a new week opening gap below us still. Don't forget my box is still down here and our carrot is still down here. So this would be a nice little push through. There was that other level we were looking at. It hit it. Remember I put the line down there? That's where we wanted to see it come down to. It's hit that one. So where's our next level? So far we're still getting support off those two candles I told you about. We've come back inside them, found support, came down, back inside them multiple times. Give you one opportunity left here. Run. We're looking for these lows to get taken now. See how we've traded below that little tiny, sorry, you guys are probably squinting your eyeballs out here. Let me make this bigger and cleaner. How's that? A little cleaner. See that little imbalance right there? You run back and see how we're trading through it. Then we trade through it again on the upside. Then we trade through it on the downside. So when you get into consolidations like this, don't keep getting caught trading above, below, because you could get your account totally munched. So we have not had anything break an old high here. So this reversal here, change in direction, it's not a swing reversal. It's just a reversal. Right there, trades back right up inside it with the wicks, do a bit of damage, but we're still going lower. So one's going lower, one wants to go higher. Well, so far the one that wants to go lower is winning, and we've got a lower down for side objective. And we found support off of the level that we were looking for right here. I think crude retracement to a bullish order block. Thanks. I only have 1 minute chart. Yeah, that's fine. Stick with the 1 minute chart, Greg. We are through the what does he call that? Event horizon. We're through the event horizon, and now we're looking for further downside. So I do like the liquidity pool down below the market here. This new week opening gaps. You have two of them below you. So to me, those are the draws on liquidity. And they're sitting around 2200 to 2200. So it's below this carrot and 2200. Oh, that would be a really deep push down through this weekly fair value gap, or no, sorry, weekly new week opening gap. And remember, we could still turn at any time. With this stuff is still open later on. We're always looking for potential reversals. Oh, it's 10:30. I gotta go. I had 54 people in here. This is awesome. And thank you so much for all you subscribers that helped me reach this 1,000 subscriber level. Bless you all. Thank you so much for subscribing and for spending your time with me. I really do appreciate it. Derek, Abs, and the boys, we all appreciate you guys coming down and sharing your patience with us for now. You'll see the logic in this. You'll see the precision in this price action study. I invite you all to come back. Invite your friends. Get the words out. Come here. It's all for free. No one's looking to sell you anything. I'm just here to show you price action study. And hopefully it helps you improve your model. It helps you guys get less stressful in your analysis of the market. And you can stay on the horse. You can stay inside price action with logic, with logical levels, and everything feels a little more comfortable. So until tomorrow, my friends, look for our new week opening gap below price here and the big box I have drawn on the downside. That's at the like 2,000 or 20,000 level. The box is down here. So here's our carrot. I'll put the carrot over here. That's the draw right now. This new week opening gap. The hungry, hungry hippo. Anyway, I hope you've enjoyed this price action study. And if you want to help your friends that are into this ICT stuff and trading, by all means, let them know. And everybody's welcome. As long as you're polite, you're kind, you're not trolling, you can learn this stuff and you can enjoy some really good detailed price action studies. So anyway, I'll see you guys tomorrow. Thank you very much for tuning in, and hasta la vista, baby.